Up, up, and away we go. Holy moly, yes, we got some follow through on yesterday's hammer candle that we talked about in yesterday's stock market brief. You're watching the Daily Stock Market Brief. My name is Michael Silva. Today's date is February 24th. This is the show that I do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Okay, in today's show, we're going to be covering our top 4 asset classes, which is stocks, indices, right? Then we're going to be talking about some certain stock market indicators, commodities, bonds, yields, and the dollar. We're also going to start off the show by looking at a relative rotation graph, seeing what sectors are performing and break into some individual stocks. Got a lot to talk about, so let's just get into it. Hey, what's up? Welcome back. It's been so long. Yes. Gross. I'm never going to do that again. This is the dashboard. What are we looking at? Obviously, very powerful day in the markets. Big move up 1.35% in the Dow, which we'll cover those charts here shortly. Pretty amazing breakout, which we planned for in yesterday's brief and the ones before that. Small caps, though, took the show 2.73% up. As far as sectors go in the S&P 500, these are the spiders here, the multiple sectors that make up the S&P 500. XLE, energy, continues to just steal the show. So it's been performing very, very well, and it still seems like there's a lot more room for it to run. So we got to keep our eyes on that and some individual stocks within it. If we look at the relative rotation graph, we're going to be looking at, if you don't know what this is, it helps us kind of determine what sectors are performing the best. And then we could go into those sectors and look for opportunities for individual stocks to trade, etc. And we've been talking about energy. That's XLE. XLF is financials in the leading category here. We're looking on a weekly time basis, 10 weeks. I could have went out longer. This is, it's a good intermediate term trend here. And, XLE has been doing good. Really, I think this is a big push towards inflation. And a lot of the energy stocks are performing really well because of crude oil, that's been breaking out pretty significantly. And then we have financials that have been doing really well. Well, if you look at yields, they've been flying sky high, and banks do very well when they can make more margin on long-term yields. So as the 10 and 30 continue to go up, we're seeing financials do very, very well here. Now, what I want to call attention to is this little guy down here in the weakening sector. That's consumer cyclical. Okay, that's XLY. XLY, I'm kind of interested in this because we're starting to see, once again, stocks like GameStop getting squeezed. We saw that going into the close and in the after hours. So consumer discretionary, consumer cyclical. I'm keeping an eye on the heavily shorted stocks because what we're seeing here on XLY is we're starting to see it move up into the leading category. So this is one that I want to pay close attention to going here into the near future. Now, XLE is doing really well, and financials are still doing very well during this current and market environment. So there's a lot of opportunities when the market starts roaring back up. What I think is a good opportunity as of right now is looking for names that might get targeted for potential short squeezes. And that right now to me is that XLY or consumer cyclical, consumer discretionary sectors. Now, when I look at the XLY, you could see it pulled back into the 50 period moving average, and we're starting to see some follow through. So this could be, the start of a bounce, which could be a good opportunity to look for individual stocks in consumer discretionary, consumer cyclical. And what we're seeing here on XLY over SPY, this is the relative strength. And as you can see, it actually been kind of weak relative to the SPY, and we're now pulling down into a previous area of support. So maybe perhaps we get some sort of move up from this section. There's 3 stocks that I want to just call out here that fall within this sector. Consumer cyclical, IGT, this is International Game Tech. I do like the ascending triangle here. I posted these on Twitter. Now, what I want to really call out here is these are heavily shorted stocks. So 20+%, the ones that I'm going to show you, 20 plus or 15% plus. I'm pretty positive 20% plus. So you need to look for areas where shorts might feel the need to cover. And what I'm seeing here is, it's some bullish context, all right? A break, probably potentially even above 1950, a confirmed break. Then we might see a push higher or a squeeze higher. Now, I don't know how aggressive the squeeze could be, but we've seen here where it consolidates sideways and we break above it and it goes pop, 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 moves up and squeezes. Then it consolidates, pop, 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 moves up, and then consolidates again. So Maybe if we break above that 1950 range, we can see this another forceful short squeeze. Very possible. Now, when you look at the MACD does look like it wants to do a bullish crossover right here, and all the moving averages are stacking up. We got the 5 above the 10 above the 20, but it's still kind of in this consolidation phase here. So I like this, but you might need to just be patient because we need, we might need confirmation in order to actually feel a little bit more confident in a trade that's heavily shorted. Here is BKE Buckle, right? I don't even know who shops at Buckle anymore. Every time like I walk in my mall, which is rare, I never see anybody in this store except for employees. So I don't know. This one you want to also be careful with. Obviously heavily shorted, high beta stock. Right now it's in this consolidation. You have an ascending triangle. We might need to get above, about 41, maybe even potentially higher. You can see it came up. That was a false breakout. Couldn't quite get above that either. So what I do like about this is it's a little bit of a doji candle on an up day. The moving averages are stacked up on each other, which is also nice. And then we have some more volume coming in. The only thing that I do not like is the MACD is not a bullish, trend right now, but it doesn't mean that it can't start crossing over. So be patient on this one too, heavily shorted, but these things could potentially see a squeeze here in the near future. Like I said, for example, Express, okay, Express is another clothing brand, consumer cyclical. That's getting squeezed as we speak. That was up 30 or 40% in the after hours, and even around 30 to 40% up during the day as well towards the close. So if those stocks are getting squeezed, we might very well see some more very similar stocks get squeezed. So BKE could be one of those. And then GES, this is Guess. I don't know who shops there either anymore. Every time I go back to these stores, they're closed. But it is what it is right now, okay? This one did have the bullish crossover. I've already called out GES. I caught it actually up on this move from here. So I made about a 7% gain. And then I sold 30% of my things. And then I got stopped out on this day. And then I entered back in on this little move here today. So I'm back in it and up a little bit on the position. As you can see, we're up 4.35% for the day, and I pretty much got in just around open, just when we got above that previous high of the previous day. So this one is set up to potentially get some forceful moves. I would like to see that take place. It looks like it's geared up, ready to do it. We had the bullish crossover, not seeing all the greatest volume come in right here. So that's my only real concern at this particular point in time. Like I said, I'm going to be very, very quick to get out of a position if it goes the opposite direction, and I'm not too leveraged up. So even if I wake up tomorrow and it's at $19 or something crazy like what we've seen in some stocks like CCIV, it's not going to just destroy my portfolio. So you need to be very careful also playing these single individual names and understand positioning, sizing, and so forth, because even if you have a stop up here and you wake up tomorrow, it's at $19, your stop's going to get triggered down here, unless if you have a stop limit, which is a whole different thing. You can look up stop limits. I don't typically use those. I use just stop loss straight up. So let's get into the indices now, kind of map out some support, resistance, and see what potentially might be taking place here in the very near future. So let's start off with the Wilshire. Wilshire, this was the hammer candle. All I want to do is show you, bam, just a solid follow through day. That pattern right here is just, what is this called? A morning star. That is a perfect reversal type pattern. When you come to a pullback, doesn't mean you got to just throw caution into the wind. And still, you want to follow through on this 3-bar candle. So big red day, followed by a hammer candle, followed by a solid green day. Now we want to get above the high of this day, which was 41,795, to get confirmation that this move can continue. This so far looks very good, and then we want to start seeing it break above the all-time high there. So looking good overall. S&P 500, we're going to look at the daily and then the 30-minute time frame. Tag to the bottom of the channel. Follow through today. Solid follow through today. What do we need to do now? Well, we need to take out 39.50. But that should be interesting because that's resistance and it's coming north of the upper portion of this channel. This could be the early stages of a very, very powerful melt up. So we got to be very cautious of that. If we do get some sort of explosion, explosions can lead into obviously disasters. So we got to look at key levels at, day by day and play it, because there's opportunities to make a lot of money on melt ups and even like days like this. But gotta always remind yourself that there's always risks involved too. Here's the 30-minute time frame. Holy moly, just jammed up, forming somewhat of a bull flag. What I want to call out here is this level of resistance right around 393 to 393.50 on the SPY. The reason why it's important resistance right there is because we're kind of pulling down on the VIX in to fill a potential gap right here from February 16th. So gaps can act as support. So if we come down here and fill the gap, we might be right around this area of resistance. So you want to get a confirmed breakout, and you'd like to see it break down through that gap. But if you're long, you might want to consider taking profits if the VIX comes down into that 20 range. And we'll show you on the daily time frame because I've talked about this on a previous brief. Let's look at the Dow Jones. Dow Jones finally breaking out of this huge, crazy range that it's been. Very powerful move to the upside. And if you remember, we talked about that descending, broadening wedge pattern way back when, right? And well, what do you know? We came up to a high of 32,009 and hit that target. So I posted that on Twitter too. That was from, I think, February 2nd was that market brief that I posted and discussed the potential for that target. And we hit it, and it looks like there's a lot of strength, so there could even be more follow through. We'll see. Another thing that really helped that move, what did we say? Well, we said we can play the 30-minute time frame here, look for a break above this, and buy into the break because it could be a powerful move because it's been resistance, 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 or support, 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 support. So we had to look for a way to trade it, and this right here was just an absolute crazy awesome breakout. Maybe potentially we come to back test it. That's always a possibility. If we do, get ready to buy. That would be an amazing trade to be able to buy right around 316.50, say 316.55. All right, and then have a stop loss below this breakout level. Because first off, resistance, 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 then it finally broke through. If it does back test it, man, that can act as some really solid support. Right now, though, it's up, and now it's kind of flagging. So potentially, if we get above 320, this could continue screaming up. We'll see. Russell 2000, look at fake breakout to the downside, 20-period moving average hold, and it's still within this channel. All signs go in this too as well. Price percent oscillator does look like it wants to come back up and start, moving back to that bullish crossover, but it's not quite there yet. We still need to give above 230. If we can get above 230 on a confirmed close, wow, this thing could continue to scream higher. We will see, because on the weekly time frame for this, which I don't have that chart, I mean, it's literally a vertical line. So it's just crazy. So you got to be very careful playing this one as well. Let's look at the NASDAQ. We're going to look at the Qs on the daily. We are still below the channel. So this we need to take into consideration. The hammer candle, nice volume, and got some follow through today. So maybe the 50-period moving average is holding, but we also need to consider the possibility that this could be a head and shoulders. So the left shoulder, head, and potentially a right shoulder. We do need to recapture back into this channel, get above the 20-period moving average, that green line, and that should signal to us that we're getting more strength in some continued strength. Now, when I show you the BP charts, I'm still confident at this point that we can break through and continue to make all-time highs. So that is still in the cards. On the 30-minute time frame, this is a little bit concerning. This was the bear flag that we drew out yesterday, and it's still perfectly within it. So you can see the gap down, and then we just held up on this trend line all the way up, getting through this little resistance and above the 50. So still overall short-term bearish context. It hasn't really put in a new high, so it's still lower highs, lower lows here. Okay, so you got to play it with caution still, but like I said, when we get into the indicators, which we will do right now, you can see on the BP NDX charts, we're very oversold right here, and that could suggest a bounce up higher. And it happened last time, right around the 50-period moving average. We're getting right around there too. Sorry, on the S&P 500, it was right around the 50-period moving average. Was it on this too? No, it was on the 20-period the last time it pulled back. Now it's at the 50-period moving average right here in the oversold territory again. So it suggests that we can see a bounce continue, and that has a lot of room to run if that is the case. Keep in mind, okay? It can stay oversold for a long time, and breakdowns take place in oversold territory. So also, you need to play with caution. It's not throw caution to the wind. It never is. You'll never hear me say throw caution into the wind. Let's go to the moon. Never happens. I mean, you can get lucky, but it's something that I would never say. That would never happen. BPSPX. Not much given us here. It still has the ability to go higher, still has the ability to fall lower. So we'll keep an eye on this moving forward. CPC, this is the put to call ratio, gives us an idea on sentiment. Everyone's still very bullish here. You can see the purple line ticking down, and then the black line, which is the 10-period moving average, still far below the 0.8. So we'll come back to this as soon as we cross above the 0.8. Then the VIX, okay? The VIX 25 level held perfectly. You can see the high today was 25.04, tagged it, and bloom to the downside, okay? So are we going to get continued move to the downside? Well, guess what? Just like I said on the previous charts of the SPY on the 30-minute time frame, if we come down into this area, it's been previous support here as well. So if we're getting the moves higher and higher in the market, and this comes down into this range, consider scaling out some profits. That's what it's not a recommendation, that's what I will be doing. I'll be taking profits if we come down here. Ultimately, I'd like to see this gap below us get filled, potentially, if that ever decides to take place. And know that if this gap gets filled, that also leaves the room for a bounce as well, because we're still relatively high here, but pretty nasty day on the downside for the VIX overall. Now let's look at commodities. Gold, not that great of a day, down $8, still lower highs being thrown. There's nothing here. This is just a bearish chart overall so far. It could be a long period of consolidation before the market wants to wake up and start buying into this. Right now it's trading like a currency. Silver, on the other hand, is looking still strong. Not the greatest day. It was up 0.62%. Never got follow through from this little breakout. This could be a little inverse head and shoulders. I like to see them more at the bottom of a pattern, but you never know. It's still considered the kind of a cupping pattern, and this trend line is still holding. Price percent oscillator is still flat relatively here, so I'd like to see some strength continue. Now, I entered into a position on the SILJ. This is an early stage position, around 500 shares, and I plan on building that position up. Or cutting it very quick, depends on what actually happens. But for the weekly time frame, we're up 11%. We're breaking out of this area. We have not got a confirmed close yet on this breakout for the week, and every time we get above this line, we've been rejected. So I'm going to be entering in now because it looks strong. The price percent oscillator does look like the start of a bullish crossover. The last time we had that bullish crossover was right here. We saw some nice strength. So I'm hoping that we could get this continued move. A lot of ideals are in my favor here. Good consolidation. I think that silver has a huge opportunity to shine. If it doesn't, like I said, I'm going to be cutting these losses very, very quickly because we know how fast silver can move to the downside. So you got to be very careful with this. Like I said, I'm looking at from a weekly time perspective. So this is not just a quick trade. This is actually building a position for a potential longer term hold. Okay, and we can follow up on it as time continues. But keep in mind, it's not something that I'd throw caution to the wind. So if I saw a big, I will never hold through a red candle like this, okay? Or even like this. Because when we had this gap up right here on this week, I was selling huge portions of all my minor stocks when we got that big gap up, because I knew that, on a move like that, it's just unrealistic to hold those gains at most of the time. And luckily for us, or me, I guess, unless if you were part of that too, we got out before, we got some of our shares out as a profit before this huge move to the downside. So that's just kind of where my eyes are. Plus, obviously, the consumer cyclical, heavy short stocks as well. I might, dabble in that a little bit. Here's WTIC, solid big day, right? This is helping energy sector really move. Hasn't really taken a breath here, okay? If you want to call that consolidation, okay, you can call it consolidation. I don't. It just keeps on. It just keeps moving. It just keeps moving. It's crazy. Bitcoin, still the bearish crossover on the MACD. There's not much going on here. We need to obviously take out 57.5. I think what's playing out here is something very similar that took place here. We saw the bearish crossover and it consolidated sideways for a little, descending triangle, symmetrical triangle, whatever you want to call it, and then we broke out. So be patient here. This is good to have periods of consolidation. I would have liked to see it pull lower because I was considering buying in at 42.5 if we got down there. So I'm still waiting. If we get down there, cool, I'll get a trade. It's all about being patient in this environment. If I miss it, I'm not too worried about it, to be quite honest. There's plenty of opportunities out in the market, and we're not short of them by any means. Let's look at the dollar. Dollar, this is interesting. So the dollar's up top, S&P 500 is down at the bottom, literally a reflection taking place right here. All right, this gray line is the yearly open for the dollar. So what's interesting is it looks like it's going to be breaking down. Okay, this could be a little head and shoulders, and then the year open is that neckline. So if that's the case, we break down. And what do you know, the S&P 500 looks like it wants to start breaking out to an all-time yearly high. So as this might break down through its yearly open, you might see the S&P 500 break out to a new yearly high and all-time high. So we're going to be keeping a close eye on that. The dollar from a weekly perspective, I don't have that chart here. I'll show it by the end of the week. It looks like a bullish chart setup. So there's an opportunity for the dollar to really get momentum to the upside. And if it does get that, then we could really see the S&P 500 struggle. But we're still well below this red line, which is 92. And I don't think that if we don't get above 92, I just don't see that being an issue that much for the markets until that specific point. And it's not just getting to 92, but the force of the move as well is very, very important. Let's look at bonds and yields. This is crazy. So we just had the 2 days pass with Powell. Yields continue to move up. 2.24 on the 30-year, 1.38 on the 10-year. Steepened curve continues, obviously. Tough to flat. This is the 10 minus 2, and we have the 30 minus 5 here. So yeah, financials are doing great. They love it when yields go up, but at what point is this going to be, is the debt load going to be an issue while yields continue to rise? Well, I brought up the 10-year chart. We showed this on, I think, last week's critical. I said critical on the thumbnail. I think it was that one. Well, you can see it's continuing to move up here into this kind of zone. Clearly it pulled back into an area of support, bounced, got rejected, and then it headed lower. So I marked out a 1.9. That'd be crazy if the yield can get up to 1.9. I personally believe that the markets are going to I think something's going to break at that point. So we'll see. We'll see if it can get through this 1.4 to 1.5 range and it maybe access some resistance because it was prior support. We'll see. Then if we start heading down lower, that might fuel the tech sector. So we might see the tech stocks really benefit because they have not been benefiting all that much from the 10-year rising, from basically, in 2021. It's been a pretty aggressive move to the upside, and tech sector has been kind of struggling. So perhaps if this turns around, we can see a relief rally in the tech sector. We are overbought here on the RSI, but we'll see. Right? We'll see. We're coming up close to that range. And then if we look at the TLH, we look at bonds. This is pulling down into that March low, and we gapped down, moved up higher, and we're very, very oversold here. So perhaps we get some sort of relief rally here to send also, bond yields obviously down, and that could help out the tech sector, potentially even help out gold and silver as well. We don't know yet, so we'll find out. Now they're also linked to the dollar, so they're all at very critical points here. So we just got to be mindful of what's taking place in the market and keep a close eye on it, and kind of have an idea of what we want to do if they start moving up, or if the yield, the 10-year starts heading lower. So yeah, we're in this zone of support, but we definitely gapped down through it today. It's going to be interesting to see how this plays out. They've just been getting, these bonds have just been getting hammered to the downside. So if you're short, if you've been short, you have had one heck of a run here. So congratulations if that is the case. Now, as the bonds go lower and yields go higher, what does that benefit? It benefits the BKX, the KRE, which I believe that's the ticker for the regional banks. And now we're moving into this red zone, right? This could be an area of support. Look at 22.5% up for the month. Holy moly. Tell me that's not just absolutely bonkers. That is killing it. It opened up and it's still at its all-time high. Like, this is the most bullish candle, I've seen. It doesn't get much more bullish and strong than this. So you got to ask yourself, are we going to continue this move, or is this red zone? We call it the red zone because when we get up to these levels, we've seen some pretty huge drawbacks. So is this the time where we're going to break through to it and it's going to become an area of support? It's very, very possible. It's very possible, but we're not quite there yet. Now, I will say we need to have the monthly close above this level in order to really confirm it. But, you know, that we still have some time in the month, so we'll see. All right, everybody. That's what I got for you on today's video. So really just to kind of wrap my thoughts up, I personally am looking at that consumer cyclical. When I look at the consumer discretionary sector right now, I do see some relative strength. I see it kind of curving like it could go into the leading category. So right here, you can kind of see the XLY kind of tailing from back here, moving itself up slowly. So I'm kind of looking for individual stocks, and I'm looking for highly shorted stocks, which is a little bit more riskier, higher beta. But if it works out, I can take a little bit of capital and turn it into significant more without actually risking a lot of capital. So I like that. And then I'm looking at the SILJ, so silver miners, those junior miners, the Junior Miners Fund, and I got into a little position there. So everything right now looks like it wants to continue to push higher. This could be a melt-up phase where we make new highs in all the indices, but you need to proceed this stuff with caution because it can turn around just as fast as it can go up, if not faster to the downside, right? Stocks take the stairs up and the elevator down. So, yep, that's all I got for you on today's episode, everybody. See you tomorrow.